Hello traders and welcome to another video review. Today is Thursday, September 28, 2023. Let's find out what's going on the Forex economic calendar today. As you can see, the most of the very important data releases are scheduled for release during the New York session and so on. From the 2 o'clock p.m. we got German CPI data, and the market participants are expecting the CPI to stay at the same level of 0.3% as it was in the month of August. 30 minutes later at 2:30, the US GDP and the US initial jobless claims are scheduled for release. The market participants expect the GDP to hike from the second quarter from 2% to 2.1%. Pending home sales data release are scheduled for release at 4 p.m. And at the end of the day at 10 p.m. we got the Fed Chair Powell to give us some kind of a speech for today. So as you can see, plenty of the data are scheduled for release during the New York session. Let's find out how it will affect the charts. We are going to start with the euro dollar as usual. So the euro dollar keeps moving lower towards the level of 1.0489. So right now our big head and shoulders pattern that I showed you guys recently on the daily time frame chart. Let me just find out. I will place my head and shoulders pattern once again for the last time on the chart. So this is the head and shoulders menu, and what we are talking about is of course this. We got the left shoulder, right shoulder, head, and the neckline here, and the projected target was 1.0550, and now the projected target was violated, 1.0489. so we got 61 pips extra for this head and shoulders pattern. So well done. Very nice scenario, very good analysis. We hit the level of 1.0517 and we broke it. So right now let's keep the technical support on this level, because you never know what will happen here. Nevertheless, let's keep the technical support, and then the other technical support, the level of 1.0483 is the last line in sand here. As you can see, it's there. If we break below this level, then we go 1.0291, 1.0223, and even lower. So very, very important level. Nevertheless, please take a look here. This is the momentum, and momentum looks like is way below the level of 30, which means that market conditions are extremely oversold. Last time we've seen this kind of levels when the price was roughly around the level of 0.9536. That was 28th of September 2022. So that was exactly 1 year ago. So exactly 1 year ago we were as well trading in extremely oversold market conditions. And then what's happened? Spike up, pullback, spike up, pullback, rally to the upside. So maybe, just maybe, this technical support will be enough for the bulls to hold the bearish pressure and reverse. So please keep an eye on the euro dollar chart. Keep an eye on this, how those technical support levels will be played out, how the market will react on this level. Now let's switch to the US dollar index. Daily time frame chart of the US dollar index. What do we see here? As you can see, very, very nice strong movement to the upside, right into the extremely overbought market conditions. So again, euro dollar is on the extremely oversold market conditions. These levels are visible on the daily time frame chart, and on the daily time frame chart, US dollar index is hitting as well extremely overbought conditions. So direct negative correlation between those two assets. What should happen? Well, maybe it's time for a pull back. This is our support, 105.85. The next target for bulls is located roughly around 107.87. This is the old swing high and old technical support. Nevertheless, this is pretty massive movement. So what should we expect here? Well, the biggest correction to the downside during the up move, let me just take my price range tool. As far as I can see, the biggest correction was 1.45. Let's just find out whether the other correction, which is somewhere here, wasn't roughly the same or something like that. No, it's shorter, 1.07. Okay, so 1.45 is the biggest correction during the up move. For the overbalance, we need to break the 1.50 percent correction. So please keep an eye on the current conditions, keep an eye on the current levels for the US dollar index. If we go down more than 1.5%, then the overbalance was done and we are starting new corrective cycle. So that's the US dollar index. So if the US dollar index is up in the extremely overbought conditions, if the euro dollar is down in the extremely oversold conditions, what then the US dollar to the Japanese yen is doing? Because that's another US dollar related pair, right? So let's just find out. US dollar to the Japanese yen daily time frame chart is showing you very big strong movement to the upside. As you can see, plenty of this volume is still located above the level of 50, above the level of 55, briefly touching even almost touching the level of 70, which is of course the extremely overbought levels. So what's going on this market is strictly connected with the strength of the US dollar index. And the next target here, take a look at this. This is the swing high from the October 22, 151.96. The recent high was made at 100 and let me just take a look, 149.72. So right now it's roughly around 224 pips away from this target, from this high, from this very nice high. That was the Bank of Japan intervention here, by the way. So almost 99% of the move was already covered, and it looks like we are going to test this level. But first, the question is, of course, whether there will be some sort of the reversal, maybe pullback. We don't have to worry about it, because from the balance point of view, the level where we need to the number of the percentage that we need to take a look at is minus 5.39, unless the other one here is bigger, but I don't think so. Is 5.99. Okay, so roughly as long as we are not down 6%, this uptrend should continue. The next target is the swing high from the October 2022. So that's my point of view on the US dollar to Japanese as well. Thank you very much for watching this analysis. Thank you very much for being with me here right now, and see you guys tomorrow. So for now, take care and bye bye.